Hello traders, it's Ombotutu FX. So today I'll be talking about the best reversal model you'll ever need to become profitable. Yeah. So as I said earlier, you can trade the trend. That's when you're following the trend, but you have to know how to trade reversals, guys. So the first thing to trade reversals, you have to know where the market is going. Yeah. That's the first thing. The second thing, if the market is on an uptrend, you have to note your protected low and your weak high. And if the market is on a when the market is on a downtrend, you have to mark your protected high and your weak low. You get, guys? Yeah. So on trading a reversal model, first of all, mark a break of structure. You can see this. This is a break of structure to the upside. After making the break of structure, another thing, when the market starts reversing, mark what? Mark your weak high. So this is our weak high. This zone is our weak high. So according to me, I took this trade. You see, guys? So I took this trade and my target was like 1:5 ratio. Yeah. So I'll explain why I exited here and why I entered here. So let's start. So first of all, I marked my break of structure, this zone. After that, I marked my change of character here. You see this line, this is a change of character. You can see it on a 1 minute time frame because we are on a 5 minutes time frame. So on a 1 minute time frame, you can see a change of character here. After making a change of character, the market reversed here at this point here. So at this point, it's our fib level. Let me show you. Just a minute. So when you draw a Fibonacci, you can see at this zone is our fib level. As I said earlier, on a 50 to 60%, that's where the market most of the time reverses. So you know where the market reverses most of the time, you see a Fibonacci. But when the market reversed at this zone, it didn't break our weak high. You see, it didn't break a weak high. So on our internal structure, it made what? It made an internal strong high. So this is our weak high, and this is our internal strong high. So if this is our internal strong high, this will be our inducement. So this will be our inducement, and most of the liquidity will be here. So most of retail traders will enter a buy at this zone, but most of the time they'll be liquidated. You can see they will be liquidated. So first thing, you have to follow what? You have to follow the big banks by doing what? By doing what they are doing. So as a retail trader, when you see something like this, don't enter your buy at this zone because this area didn't break this structure. You see, it didn't break this structure. So according to me, the market didn't break this structure, and I did what? And I went to 1 minute time frame. Let's go to a 1 minute time frame and see how the market was looking. Not this zone. Let's continue scrolling. So you can see on a 1 minute time frame how the market was moving. Like this. You can see another inducement here. So this is a break of structure. You see, guys, this is a break of structure, but it didn't break what? Our strong high. So when the market, you can draw a Fibonacci at this area for entries. So this will be our 50% area. That's where I entered my trade at this 50% area, and my stop loss was just slightly above the internal strong high. So after that, what did the market do? The market came to our fib level, then it dropped massively. You see. So my TP1 was at this level, this orange level. This orange level is our fib level from this point to this point. That's my TP1. And my TP2, I was anticipating the market to clear the liquidity at this zone. You see, this is our liquidity. The market to clear liquidity at this inducement zone. Then my TP was at this area. You can see this area, for which the market came, reversed a little bit. Then this was at 12 a.m. in the morning where the market closed and it opened. leaving a gap. Then after that, the market dropped massively, hitting our TP. You can see. Let me extend this line. You can see the market smashed our TP like a nonsense. So when trading reversals, you have to master inducements, you have to master change of characters, and you have to know where to enter and where to exit. So when you enter on a fib level, your exit should be on a fib level. When you enter on an FVG, your exit should be on an FVG. If you enter on an order block, your exit should be on an order block. And most of the time, you don't set your TP at the strong lows or strong highs. No, you don't set your TP there. Thank you for watching.